What's up everybody, it's Prashant here. Welcome to my YouTube channel and thank you for joining me today. If you've been following my channel for a bit, you know that I've been following Hertz since their bankruptcy. And today I'm back with another update video on Hertz because they recently had their earnings call. So today I'm going to be going over their fourth quarter earnings call, which also has data for the fiscal year 2021. And I'm also going to be touching on how those stocks and warrants are doing. Okay, now that we've got that out of the way, we're going to jump into the earnings report right after you smash the like button and subscribe to my channel. Seriously, you guys, I'm trying to get to 500 subscribers and it would mean a lot to me if you go ahead and subscribe to my channel right now. Thank you so much for doing that. Okay, let me throw up the Hertz earnings report on the screen here and go over it with you. So the first thing that I noticed right away as I opened the earnings report is that Hertz has named a new permanent CEO, Stephen Scher, effective end of February. So right now he's the CEO of Hertz. He succeeds Mark Field, who is an interim CEO after Paul Stone. This makes him the third CEO since Hertz emerged from bankruptcy. This seems odd on surface, but actually it is pretty common for companies that are going through bankruptcy to do this. Typically, they will have one CEO that brings the company through the process of bankruptcy, and after that, they will announce a permanent CEO. And sometimes they'll have an interim CEO while they're trying to find and assign that role to a permanent CEO. Like the last CEO, Paul Stone, did in the previous earnings report, his successor, Mark Fields, has put in a few words at the start of this report. Of course, now the CEO will change, and the next time we'll probably hear from Stephen Scher. But let's read his words. Let's read what Mark Fields said, and I quote, "2021 was a transformative year for Hertz. Sustainable structural improvements and disciplined fleet management contributed to a strong performance across our top and bottom line, despite the challenges presented by COVID, supply chain restraints, and labor shortages. We have demonstrated our resilience and ability to innovate and to make progress on playing a central role in the modern mobility ecosystem." So what he's basically saying here is that he believes that 2021 was a good year in his opinion, and that he believes that Hertz will continue to do well in the future. So let's look at some of the numbers in this report. That's what I'm always the most interested in. I'm going to be looking at the summary results on page 1 as well as some more results on page 4. So on page 1, we can see here that the fourth quarter revenues for 2021 were $1.9 billion compared to $1.2 billion same time in 2020, a percentage increase of 58%. However, if you look at the very last column on the right hand side, it shows us that the percent increase or decrease of 2021 results versus 2019 results, the pre-pandemic, pre-bankruptcy results. So here we see that revenues are still 16% below 2019 levels. So we haven't really come back to the pre-pandemic levels and pre-bankruptcy levels yet. Honestly, this is not surprising. Last quarter included Thanksgiving and Christmas, which are typically higher volume days where people travel a lot to see friends and family and they'll rent cars there. But at the same time, while travel did rebound in 2021, we were starting to see the Omicron wave, which I think undoubtedly would have dampened some of that travel demand. The adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization for the fourth quarter of 2021 is $628 million compared to only $54 million in 2019, which is absolutely fabulous. Okay, next thing that I like to read in the Hertz earning report is their vehicle utilization. So their vehicle utilization is 75% in 2021 compared to 77% in 2019, both fourth quarters. What's interesting to see is the fleet size. So they're showing about 470,000 vehicles now in 2021 compared to 686,000 vehicles in 2019. This tells me two things. First, they can charge customers more now than they were able to do back in 2019. That's why their EBITDA is so much higher now than it was back in 2019. We know this anecdotally too, right? People have been reporting having to pay much higher car rental prices throughout the pandemic than they did pre-pandemic. The second thing that this number tells me is that Hertz is growing its fleet once again. The last time, 2 quarters ago, when I reviewed the Hertz earnings report, they reported a fleet of just 350,000 vehicles. Now, so clearly, they've added 120,000 vehicles over the last 6 months or so. Let's next look at RPD, or revenue per day, which is $62.1 in the fourth quarter of 2021. So what's revenue per day? So basically this is how much they're able to charge per rental day. So this is basically another way of saying on average a customer is paying $62.10 per day when they rent a vehicle. So $62.10 in fourth quarter of 2021. This is slightly lower than the RPD in the second quarter of 2021, which was $65.04. Now let's compare this to the 2019 numbers. They were charging at that time only $44.45 per day. So they are currently able to charge 40% more money for the same car. Basically, if you wanted to go and rent an intermediate car, let's say you were paying $44 in 2019, you're now paying $64 for that exact same vehicle in just 2 years. Inflation, right? Now let's scroll to page 5, where we see that earnings per share are about negative $1.52. Basically a loss of $1.50 per share in the last quarter. This is 50% more than the loss of $1.05 in the second quarter. Now let's consider the earnings per share for fiscal year 2021. We see a loss of just 27 cents per share. This is incredible. 2020 saw a loss of $11.44 per share. Clearly, the company is doing something well. Last time I made a video on Hertz, I talked about the fact that their business is tied to the overall opening and continued growth of the economy as a whole. Now, their business works when people take trips for business or for pleasure. People go on business trips, people go on vacations, go visit their friends and family. They fly somewhere, they rent a Hertz rental car, and Hertz makes money. So as long as people continue to travel, they will continue to make money. Now, here's the thing. If we think about pleasure travel, I think that is undoubtedly going to rebound to pre-pandemic levels. People love to travel. People want to go and see new places. People want to go see their friends and family in the holidays. They want to take vacations to get away from their jobs, whatever. I'm not at all concerned about pleasure travel coming back. It might take some more time as people's finances get shored up again. Right now, we've got a lot of money, but now we're seeing inflation getting high. So as things maybe calm down in 2, 4, 5 years, whatever it might be, I don't know how long it will take for that travel demand, that pleasure travel demand to come back, but it will come back. Now, if we talk about the business travel, now here's the thing. For some people, it makes absolute sense to go out on the road and go meet your client. There are a lot of people in the world who still believe that meeting a client and shaking their hand is the best way to gather business, which is fine. But there are other people who believe that, working from home is more acceptable now, Zoom is more acceptable now, and maybe it's just as easy or just as effective actually to do those meetings over Zoom. Now, I don't know which side of that argument the majority of people fall under, but business travel is such an important sector to all travel industries, whether it's hotels, whether it's airlines, or the rental car business. So I think it remains to be seen how business travel changes over the next few years. There are some people who want to go back to the pre-pandemic way of doing things. They're saying business is good, business is back as usual, and that's how we should maintain things as they were pre-pandemic. But there are other people like Kathy Wood who think innovation plays like Zoom are here to stay. And if more and more business is done virtually without the need for business people to travel, this could hurt Hertz business. Personally though, I don't think that this will be a huge concern. Maybe we'll see some reduction in business travel, but I think a lot of people, especially people who are working from home a lot, they don't get to see their coworkers or their clients very much. I think they're going to want to travel anyway, if only to get out of their house for a few days. Now let's talk about the Hertz stock and warrants once again. So at market close on March 4th, 2022, when I'm recording this video, Hertz stock is trading at $19.21. Hertz warrants are trading at $12.85. Just like the rest of the market, the Hertz stock is down, but warrants are higher than they have been. For example, on October 22nd, Hertz stock closed at $24.69 and warrants at $11.26. So the stock is down about 22%, but the warrants are up about 14%. So let's try to understand this. Warrants are increasing in value even though the stock is down right now. So this tells me only one thing. Investors believe that the stock is going to be worth more in the future. So why do I say this? Well, think about it. If I were to buy a new Hertz warrant today and exercise it immediately, it would cost me about $33. But this would put me underwater by about $21 because the stock is trading at just like $19 and change. So this makes no sense, right? This leads me to the only possible conclusion that investors think that the stock intrinsically is valued at least $33. Investors are assuming that the current depressed stock prices are because of the malaise in the larger stock market because of inflation as well as the Ukraine crisis. And they believe that in the long term, the stock should come back up to meet that $33 value or even exceed that in the future. And I'm sure that warrant prices will continue to increase along with the stock value to reflect this change as well. Now let's talk about current warrant holders. If you're a current warrant holder, this part of the video is very, very important to you. I've been doing this segment of the video in each one of my Hertz videos to kind of explain to you how your investment has been doing over the years, because it's kind of confusing. Warrants are not a security instrument that most people or most investors are familiar with. Even I didn't know much about them before Hertz came on the scene and released this new deal after the restructuring after the bankruptcy. So let's go through it. The last price of the old Hertz stock, like before bankruptcy, was $8.74. Let's assume you bought one old share at that price of $8.74. So when Hertz re-emerged from bankruptcy, you got $1.53 in cash, 0.09 new shares, and 0.64 warrants. So at today's rates, the 0.09 shares are worth $1.73 and the 0.64 warrants are worth $8.22. So in total, your Hertz holdings, including the cash, are worth $11.48. So you're already up $2.71, a profit of 31% in just about 8 months. That's really great. Even better, you should note that the total value of your holdings keep going up even though the stock is currently down. Because the value of those warrants keep going up, the total holdings are increasing month over month and quarter over quarter. So like I've said in my previous videos on Hertz, if I were a Hertz warrant holder, I would continue to hold Hertz warrants. If you've also continued to hold Hertz warrants, you've likely made some money. If you've sold them, it is possible that you might have lost some money depending on your cost basis. The way I see it, there is really no harm in holding on to these warrants. If you were a previous Hertz stockholder, you had to go through bankruptcy and went through the pain already. And if you've held through that time, this is the time to reap your rewards. Just hold on to those warrants till they rise to a level where you want to take some profits, you think that it's enough profit for you, or you don't want to deal with the risk anymore, or you need the capital to do something else. So that's all I have for you guys in today's video. Hope you enjoyed this video, and if you do, please go ahead and hit the thumbs up button right there and subscribe to my channel. Also go ahead and click the bell icon to be notified instantly when I post a new video. I post at least one new video every week. I try for 2, and I would love to see you back here on this channel. Also go ahead and follow me on TikTok and Instagram where I post weekly as well. Thank you so much for watching, and see you next time.